Welcome to everyone. This week video will cover the SP 500 for the week of February 12, 2024. If you like this video, don't forget to click on the like button, subscribe and click on the bell to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. The 20-week cycle. In the last update, I mentioned the possibility of, during this 80-day cycle peak formation, the SP 500 will reach his last upside target at 4,852. On Monday 22, the SP 500 made a new all-time high at 4,868, meeting and exceeding his 4,852 target. This target has been triggered on November 17, 2023. The 20-week cycle is still pointing down, and the low is still expected between the end of February and the first week of March. At that time the cycle line, which should be used as support, will be at 4,577. There is a high probability the SP 500 downside target for this 20-week cycle will be around that price. But like mentioned in my last SP 500 update, since the market is bullish, there is a possibility the SP 500 won't meet his cycle line. How far from the cycle line the low will form will give us an indication of how bullish is the market. We will have confirmation of the 20-week cycle peak when the SP 500 will cross below the 80-day cycle purple uptrend line. The success rate is 100%. Let's now dig in shorter time frame to see what's happened and what we can expect in the near future. Let's start with the 10-day cycle. The last two signals with his cycle line was on January 31st. When the SP 500 crossed below his cycle line at 4883, providing a potential downside target at 4,836, 47 points of profits, or 0.97%. The same day, the SP 500 met his target. The second signal was on February 2nd, when the market crossed above his line at 4,900. For a potential upside target at 4,954, 54 points of profit, or 1.1%. The SP 500 met his target the same day, confirming he still have a good amount of bullishness in this bull market. On Friday last week, the SP 500 made a new all-time high, hitting the very important 5,000 mark. The last 10 days cycle low was on February 5th, and the next one is expected on Monday, February the 12th. On this table you will find the support lines and their potential targets if the SP 500 cross below them this week. On the left side of this table, you can see the cycle trend will be down for Monday, the date where this 10-day cycle is supposed to form a low. Then the rest of the week, the trend will be up. Since we will start a new cycle, we will be on the up phase of the cycle. How big the move up will be? It's all depend on which phase the longer cycles will be. I will come back on this table later on. The success rate, if trading the 10-day cycle, is 100%. Meaning when we trade this cycle, and we take all the trading signal, we make a profit each and every time. The 20-day cycle. The last 20-day cycle low was on January 31st, and the next one is scheduled between February 14th and 15th. Because we expected the 20-day cycle form a low between February 12th and 14th. The cycle trend for this 20-day cycle is down for the first 3 days of the week. Then we will start a new 20-day cycle. For this reason the next few days the trend will be up. The amplitude for this cycle depend on the longer cycles. Here are the support lines and their potential downside targets if the SP 500 cross below it. The success rate for the 20-day cycle is 90%. The 40-day cycle. The last 40 days cycle low was on January 31st. The next one is expected on February 26th. Since the cycle trend is up on Monday and down the rest of the week until the February 26th, when the SP 500 should form a low, we can expect the 40 days peak forming very soon, possibly this week. The peak is scheduled for Monday, the red dashed line, but since the market's still very bullish, there is a high probability the peak will occur on the right side of the cycle, In this case, we can expect a mild correction. Technically, the SP 500 supposed to cross below his cycle line, providing a potential downside target. Here are the cycle lines for this week and their potential targets if the market crossed below. We have to keep in mind the important 20-week cycle line support, around 4,500. The success rate for this cycle is 84%. Meaning trading only the 40-day cycle and taking each and every signal, there is a very high probability of profits. The 80 days cycle. The last 80 days cycle low was on January 5th. The next low is expected on February 26th. The cycle trend is down for the all week and until the 80 days low formation on February 26th. Because the cycle is pointing down since the end of January, the red dashed line. We can expect the peak forming very soon, if not already on Friday. The success rate for this cycle is 100%. What's next? During this video, the cycle trend is different than the market trend. The cycle trend tells you where is the market should be compared to the cycle. It can be only in 3 different places. On the left, the up phase. On the peak, usually represented by the red dashed line. And on the right side, the down phase of the cycle. If I take example of the 10-day cycle. Monday the cycle pointing down, because we expect the 10-day cycle forming a low. Then the next 3 days, the cycle is pointing upward, because we start a new cycle. Then on Friday the market should be forming the peak. The amplitude of the 10-day cycle depend on the longer cycle's trend. Because the next 4 longer cycles pointing downward. The amplitude for this cycle shouldn't be important. So we can expect a small move up for the next 10-day cycle. Let's compare with the market trend. To define the overall market trend, we have to add all the cycle trends we are interested to. We can give a score for the trend direction. We can give 1 when the cycle trend is up and -1 when the cycle is down. Let's say we are interested to trade the 20-week cycle. We add the 10 days, 20 days, 40 days, 80 days and 20-week cycle trend. The 10 days. Monday -1. Then Tuesday +1. Wednesday +1. Thursday +1 and Friday -1. For the week the 10-day cycle is moderately up with a total of +1. That's the reason why I expect a small move up. Then we do the same thing for all the different cycles. 20 days, -1. 40 days, -3. 80 days, -5. 20 weeks, -5. So the market trend for the week is negative with a total score of -13. Because the score is very negative. There is a high probability the market will start his correction to form his 20 weeks low. In conclusion, everything is in place for the 20 weeks peak. The last week of February should be an important turning point. On the longer term, the longer cycles, 40 weeks and 18 months are up, so the market's still bullish for now. After the 20 weeks cycle low has formed, we should have a very good rally, bringing the SP 500 to new all-time highs. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.